Bryce has no sound. Okay. I got sound on my side. I've just checked all the connections here, and it looks like Mac, getting microphone. Oh, okay. I see what's happening. It's select wrong mic. Let's try it now. This should be the right microphone. All right, guys, I apologize. So I'm going to take this. It's working now. It wasn't before. Okay. I apologize, guys. So let me recap this for you here. Okay. And thank you guys for your patience. So here's the deal. Let's let's I'm not going to take it all the way to the top, but I'm going to take it back to here, right? So we got order book dynamics changing. We got this massive sell wall removed, and now we got to figure out why, right? And what's happening here. So we haven't gotten to the order book part yet. What I'm looking at here is two really important levels here on this chart. One is this timescape level. And I talked about this. We've been talking about these timescapes quite a bit. And so this is a level that we need to really keep an eye on. There's two actual timescape levels that could come into play here. One is that January 6th timescape level here. That's the first weekly open of the year. And the other one is the yearly open down here at 93.3. Okay. So these are the two timescape levels that are in focus now, for better or worse, and for lack of a better way of describing it. And what is interesting to me and what's important to me here is this 50-week moving average, the red 50-week moving average here. Now, I love this January 6th timescape level because of the double bottom scenario here. And what I was just telling you guys that you didn't hear, and I apologize for that audio snafu, but what I was saying is this red trend line. This red line serves as, and it has served as macro support literally since way back in March of 2023. And all of those support tests have led to big moves, explosive moves to the upside, right? We came down here, and this was really where things kicked off. From the 25K range, we had some consolidation. We retested support down here, and then boom, it was up. This was, in hindsight, the beginning of the bull market. One second. November, jumping ahead here. What do you think would be reasonable and safe area to sell Bitcoin before Christmas if you just got back in at 101? Don't want to get trapped again if the cycle ends this year. We'll get to that. That's a great question, November. Let me just finish this thought here, right? And I'm keeping your question up so I don't forget you. So I'm talking about these retests of support, right? So again, we started here in March of 2023. We retested here and took off from 25K. We then tested again in September of 2024. That was from the 54, 55K, after this consolidation here. And then boom, big leg up. That was up to 100K, right? That's where we really started to break new ground. But then that was met by another support test, and a support test that, like this one, has wicked through the 50-week moving average. But look what happened after that. We went from 77K up to a new all-time high at 127K. Or 120. Is that really 126? I thought we were at 127. Okay. Whatever the case. So yeah. Now we're support testing this now. And I like that we're at this timescape level. I like the whole double bottom aspect of it. I like the yearly open aspect of it. I like that this is a higher low. It's a slightly higher low than this, right? This one was 98,240, and yesterday we dipped down to 98,898. Doesn't mean we can't go lower, but for the moment, that's holding. So what I want to see here now is I want to see this close, the weekly close, above this red 50-week moving average. And I think if that happens, that sets us up for a good foundational move upward, right? The next leg up. We need a foundation of support, and that would be it. Now, if this breaks down, we still have another, perhaps even stronger foundation, and that would be the yearly open. 2025 open was at 93.3. And it just so happens that we have confluence with uh, the earlier trend line. This was the macro trend line that I had in place earlier in the year. And so this was really building off of that 2022 FTX crash. This was the line. So this line really only appeared, or I really only placed this here after we had kind of, that election, that Trump pump hole narrative, and the trajectory got much steeper. But this was the original line. And I don't redraw and change lines. I just kind of, I keep them here, and I will go back and revisit things from time to time, right? So I know I got a lot of stuff on my chart, but I like to keep these things so we can reference them. But nonetheless, this would be, in my opinion, at least at this stage, kind of the line in the sand for things to hold. And on a with all the doom and gloom in the market right now, some bullish perspective, and I really do try to be neutral, but some bullish perspective, at least for Bitcoin and the macro outlook for Bitcoin. You'll notice that all of the moving averages are unwound here on the weekly time frame, right? We have the green 21, the red 50, the blue 100, the purple 200. This is healthy, in my opinion, as is this support test. Even if we come down to here, guess what? I'm a buyer. Now, in terms of where we go from here, and now addressing November's question, what do you think would be a reasonable and safe area to sell before Christmas if you just got in at 101? So I'm still focused on the same areas that I've been all along. And gosh, do I have that chart open? I don't have that chart open. Let's see if I can open another chart real quick and give you some more insight on that. Okay, so here's how I started my price targeting for the year. Initially, we had this cup and handle pattern forming, and I called this way back in March of 24. Based on the measured move out of the cup and handle, I had forecasted 122.5 as kind of my target. And so that's right here, right? So there we go, 122.5. And that target, we hit that target, and we also went higher, and these things are not exact, right? So we did go higher. In fact, we went to what is now our new all-time high at 126.272. That's like here, something like that. 126. $272. Okay. So that whole range to me, 122 to 125, is still a ripe target for me. I did some profit taking in there. If you really want to be conservative, because I honestly do not think that we're necessarily going to see a new all-time high before the end of the year. And so some other potential targets for you to think of, I think that 122 to 125 range, or even 120 to 125 range, anywhere in there, if you wanted to do split TPs. And if you wanted to be even more conservative, I would probably look back to the 114, 115 range, because we're having a lot of resistance here at the moment. If that changes between now and then you might consider adjusting. But I would encourage you to set a number and stick to it, and not keep changing it. Right? You could do split TPs to where maybe you take a little at 114, and then maybe you take a little more at 120, et cetera, et cetera. If you want to split them out like that, at least that's how I would approach it. I don't give advice here, so I'm just going to put it in terms of how I, what I would do. Okay, so absolutely no financial advice, right? So in terms of other potential targets, um, what I have for my next targets, I like, there's a lot of talk about the 150 range. And if we're looking at straight up fib extensions, and this would be a fib extension from the prior all time high at 69K to the swing low down to that, that FTX crash, um, then, then there's a 156 target. You hear about 150. 150 is psychological. There's nothing necessarily pointing to 150. 156 is, if we want to be more precise, but there's going to be resistance at that 149, 150 level, maybe a little pullback, and then go back up if we do indeed go there. You could also, one could also argue, the other swings from prior highs. And if you wanted to do a fib extension from, say, this high that was like 109, something like that, and work it out this way, 130. There's your 130 range. So I think 130 is going to be, if we can reclaim these levels and get back up, to all-time high territory, I think that 130 is plausible. But I don't think, like I said, I don't think that's going to happen before the end of the year, and I'm going to show you why. If I could, and let me simplify some things because we got a lot of stuff on the chart. I'm just going to turn off timescapes here for a minute, just to at least get one set of stuff, one set of lines off the chart. This is trend precognition, and I've got two trend precognition algos running here. This is the A2 plus algo with the arrows, and this is the A1 with the dots. And this orange A1 slope line is predictive. It's a momentum indicator, and it's a real-time indicator. These arrows and these dots require a full candle closure to actually print, whereas this A1 slope line moves like a moving average in real time. And it's giving us the direction of the momentum and the strength of the velocity of that momentum just based on the angle, the trajectory of it, if you will. And so what it's telling me on a higher time frame, it's telling me that it's expecting, you can see from the A1 algo here, that we're in a downtrend, and we indeed are. And more importantly, on the quarterly, I did the same exercise on the quarterly time frame. And so this was at the Q3 close. We got a signal, and it's a strong signal. You can see it's a 63% probability right here, which is a very strong signal, by the way. So this is telling me it's not likely that we will see a new all-time high this month. Now, let me throw a little wild card at you. I did not expect to see a new all-time high based on this signal, and we made one. But we also made a new low and the biggest liquidation event in history. So so this signal has regained its momentum. That doesn't mean it can't be invalidated, but at the moment, this is valid, and this is signaling that there's not likely to be a new all-time high before the end of the year. Now, let's get into variables that could change that. And one of those variables would be manipulation. And November, I hope that answered your question. I gave you a range of numbers, but the conservative move is probably in that 114 range, and then 120 to 125 range for a secondary shot, 130 for a third shot, 150 if you're feeling like a hero. But again, I don't think 150 is going to materialize before the end of the year, or even 130 to be that for that matter. But split TPs are your friend. I personally like to dollar cost average my way in and out of positions, right? So keep that in mind. That's what works for me. You got to do what works for you. Now, in terms of potential manipulation that could change that, look at this SOB right here, right? That is a massive bid ladder, ask ladder, Bitcoin ask liquidity, massive sell wall, well over 250 million, stacked up here from 105K up to 112K. And I think that when this appeared, it shocked a lot of people. A lot of people got scared, and rightfully so, because this tends to, when things like this appear, they tend to push price down pretty quick. And that didn't happen so fast this time. In fact, um, there was, for a short time, and the beginning of it is off the page now, so we can't see it, but here's the remnants of it. Whales were still buying. There was still buying volume happening here when this first appeared, which is rare, by the way. And I had a feeling that it was probably something designed to suppress price, because who in their right mind is going to reveal a ladder of asks that large so abruptly in the order book? And the fact that, I had a feeling it was going to get rugged, or roof pulled, I should say. Rug pull happens when it's bids. I call it a roof pull when it happens from the top. Um, so, so I had a feeling they just were trying to push price down. I thought in my heart that they were trying to push down to that 98 level, or possibly the 93 level, where I showed you those timescapes a few minutes ago. But that wasn't the case. And a lot of times we'll see evidence of them getting, pushing price into bids, but their bids didn't get filled, right? If these are their bids, and I don't know that they are, right? I have no way of knowing if this is the same entity. But a plausible reason for doing this might be that they may have simply had a short that they wanted to close. Okay. Now, do you use if this is theirs, do you use 250 plus million to push price into a $30 million order? I don't know. Yeah, not having that big of a stack, I wouldn't know, but seems excessive. So this was a big, intimidating move, right? Liquidity hurting, pushing price down for their own gain, using their stack to push price down, and it worked. Now, often when we see something like this, pull, we'll see price move back up, and it did briefly, right? It pulled, and then price started to go back up. And then we started to see a little bit of suppression come back in and push it back down. So I would be surprised if this is the last time we see this here this year. I think that the game is far from over. Now, parallel to this, we have a guy in the White House who's not so happy with what's happening in the market, right? And so he's putting out all these statements, and his family's putting out all these statements of, their confidence in the market that stuff's going to go up, and they're going to make. I saw another post this morning that he's going to make a big announcement. Listen, we have heard this. I can't even count how many times before. Well, big announcement, big announcement, big announcement. The vast majority of the big announcements, or the quote unquote big announcements, have been hot air, right? Like, don't tell us about a plan to make a plan. Don't tell us about an idea or a concept or what you could do. Tell us what you've done. Tell us what you're doing. Tell us what is signed into law, or what there's an executive order to do, and what is actually happening. So if he comes out with a comment or a statement that has substance behind it, then yes, price will go up. But if it's more hot air about a plan to make a plan, then the market's just going to, shrug and likely go lower. So at this stage, yes, it's a pivotal time in the market. It's a pivotal time for Bitcoin and the broader crypto market, just based on the structure in the charts. No doubt about it. But we have this 4-year, this 4-year cycle narrative. And if you stick to that and you count the calendar days, then that is a likely reason we're seeing a lot of the distribution that we're seeing right now. Okay. A lot of people consider the 4-year cycle, that this is where we switch just based on what has happened historically. And it may develop that way. But I don't know. I just feel like we haven't got a confirmation that it's over yet. Um, these scary times are the times when opportunities present themselves. So I would say proceed with caution. Position sizing is key. If you dare dabble in alts right now, know that they are exit liquidity, and there's a handful of them that are absolutely freaking soaring right now. Um, so so I'm not going to tell you don't do it. I'm just going to tell you proceed with caution because I mean, look at this. Zcash 200% in the last week. I mean 60% in the last week. I saw something like 200% earlier today. I don't know what that was, but look at this. ICP 135%. Do you think these are just really strong projects that are miraculously making these moves, or do you think that they're low liquidity order books that are being exploited? I'm going to go with the latter. I don't even know what those coins are, to be honest with you. Look at Dash, up 157%, and Dash is like a dino, right? Um, just know these are exit liquidity. So if you're getting into this, don't be greedy. Take the money and frickin' run, okay? And then turn that into something else. Filecoin, 29% in the past week. So amongst an ocean of red. DCR, 131%. ZK, never heard of it, 145%. On a coin with a $592 million market cap, you know, I would just be very, very cautious, and I would take profits as they come to you and get in, get out, and turn that, just keep turning capital the best you can. That's about it in a nutshell for me on this one, guys. I would just say, just real quickly, when large blocks of liquidity appear, whether they are bids or whether they're asks, when they first appear, I tend to view them very cautiously. I don't trust it until it, and until it proves otherwise, to be honest with you. This just did not seem like a real organic move. This seemed like somebody trying to push price down, and that's exactly what happened. Now it's, looks like it's going to move even further. Maybe I do get those bids at 98 filled. If you're not confident and you're trading, I would be taking very small profits these days, and turn that capital and not leave the risk on the table. Whereas if you're building a longer term position, you have conviction and you're going to hold for months or potentially years or potentially forever, then you look at these key levels as dollar cost averaging opportunities. And for me, those two key levels that are in our sights right now would be these timescape levels, which are around the yearly open. Okay. So again, we have one down here at 98.3K, and the other is below it at our yearly open at 93.3K. And the reason I like this one so much, it's the one we're at right now, and I'd like to see it hold. I like the relationship with with a recovery to the 50-week moving average, whereas I also like this January 2025 because of the fact that there's confluence with the longer term trend line and the precise yearly open. This right here to me is as strong of foundational support as you could ask for. So if we do indeed extend down this low and we get a bounce, that's going to be the leg. It could happen anywhere in this range. We're talking about now a $7,000 range from where we are. What would this be in terms of a decline from here? If we were to go all the way down, it would be another 7.5%, not even another 7% from where we are. I would not, for my position, again, I'm in, I'm building this position since 2020, 22. I think my average entry is in the 50K range. So I've got lots of upside and I've got lots of room to let it breathe. And if you're a long-term trader, you just have to find that patience and that discipline to let these trades breathe. The volatility is always going to exist in Bitcoin and crypto for that matter. And you just have to learn to weather it. So again, if you're a long-term trader, and you have a hard time looking at this stuff and watching your portfolio decline, ebb and flow, then, and you have conviction over what the long term is, then just stick with your conviction and don't stare at it every day, because you'll make yourself nuts. Now, if you're a trader, these conditions, I would say, is a trader's market. Take these entries, take the money and run. And if you're looking for a tool to help you identify the entries, these timescapes work great, and so does the MTF, mean reversion indicator. You can see here, I've been using it on ETH. I can show it to you on, I could show it to you on any asset on TradingView. Let's look at Bitcoin real quick. I have been trading in a 1.5% deviation. Is that what I have open here? No, that's a 2, and 2%, and the volatility looks like 2% is hitting pretty good. I have actually been trading it. Oh, going the wrong way. Right here. So that gets me maybe a few more signals. And I just dollar cost average these. Okay. So you can adjust this to the volatility. You can adjust this to your strategy. If you're scalping, I just take very small positions here, small one, small one, small one, small one, and they add together and they dollar cost average down. If you see that, with your settings that the prices, you're having a lot of drawdown, then you simply go to a deeper deviation. I have a whole grid of these running. That's 3%, which obviously is too deep for the volatility that we're having right now. 2% looks like the sweet spot for today, and we've had a little bit of that this week, but overall, over the past couple months, I haven't had a ton of signals in that range. So I'm going to leave you with that. If you want more info on any of these tools, you can find links in the description. And of course, if you want to engage more, man, I'd love to engage with you more. And I invite you to join us in our Telegram community. Link to that is in the profile, in the description, in the description of the of the video, and also on the Material Indicators homepage, the YouTube channel, and the X channel at mi_algos. That's a wrap, guys. Hope I'm helping you trade smarter. Have a great day.